investments, and that's the main thing we're going to be talking to you guys about today is the stock market. So how many of you guys have any money in the stock market, or maybe your parents have money in the stock market? Sure. That's a great question. We're going to cover that. The question was, what's the stock market? So you'll learn more about that today. You're in the right place. Okay. Welcome to the stock market. So I'm going to let, as we go through, Enrique is going to kind of go through the stuff on the slide, and then I'm going to kind of jump in and give a little bit of extra information too. So go ahead.
Yeah, so has anybody heard of compound interest? You guys may have heard it in some of your math classes. Yeah, shaking some heads. So Albert Einstein, he doesn't say it specifically here, but he's called it the eighth wonder of the world. Because it's really cool how compound interest can build up so much over time. So the plan is, or the key is to start super early when you're starting to invest your money. So if you invest your money for over 30 years, that compound interest that starts super little is eventually going to just build and keep building up over time. So hopefully you guys can retire super healthy.
I'm going to give you an example of this. Has anybody ever heard of the guy Warren Buffett? Oh, that's so interesting. Okay, so Warren Buffett is this really old guy, still around. He's in his 90s. He's a very famous investor. And everybody talks about Warren Buffett when they talk about successful investors. So I wish I had a picture, but anyway, look him up sometime. So everybody thinks about Warren Buffett as being one of the world's most successful investors. He's averaged returns of around 20% per year on his investment program. And today he's worth $100 billion or so. There's another guy, so everybody thinks about Warren Buffett as the world's most successful investor. There's another guy, Jim Simons, who's another really successful investor, but he's only worth $15 billion, but his investment program has generated 90% returns per year. So way blows Warren Buffett out of the water. Come right back to you. The difference between them two, why one guy's got 15 and the other guy's got 100 billion, is because Warren Buffett started when he was 16 years old. And by the time he was 20, he had $1 million already and he was investing. And that compound interest has worked over a much longer time for Warren Buffett. You had a question?
Are these the only 15 billion?
Right. Compared to 100, it's less. Compared to what I have, it's great. I would love 15 billion. I will take 15,000 or 1,500. $15 even.
All right, so basically within this module, what we want to try to cover for you guys is exactly what is a stock. So he'd asked what was the stock market. So what is the stock and what is the stock market? We're also going to try to explain to you guys like why should you invest in stocks. We've talked about that a little bit over already with the compound interest and all of that. How are stock prices determined? That's a little bit of a interesting concept. How are they actually priced? So it's very interesting. And then how can I practice investing, or like how can I improve my skills to help me retire?
Yeah, so there's 3 things that we're going to want you to learn today. So only 3, it's going to be really simple. The first one is, why should you invest at all? What's the point of investing at all? And the point is, you have some money today, and you want it to grow to be worth more money tomorrow, right? So what's a situation where you have money today, but you're not going to spend all of it, you're going to put some away because you know you might need it later. What might you need it for? If I point at you, say your name and answer the question. So what might you need it for later? Why wouldn't you just spend all your money today?
My name's Leah, and maybe you wouldn't spend it so you could save up for like a house.
Yeah, exactly, for a big purchase like a house or a car. What's another reason right up front? Say your name and answer the question.
Amari?
Amari? What happens when you get old and nobody wants to hire you anymore? Yeah, old. You know, like 65. Yeah. You retire, yeah. So now you need money saved up because you're not going to have money coming in from working a job, right? So that's the other big thing that people... So the whole point of investing is what? Say your name and answer the question. Jackson. Yeah, take some of your money today, have it grow to be worth more money tomorrow. So that's the first thing. Second thing is, what is a stock and why would you invest in stocks? What do you get out of investing in a stock? And we're going to cover that in just a second.
Yeah, okay. All right, so an actual share of a stock, what we call it, is actually a tiny, tiny sliver of actual ownership of a company. So let's say everyone knows what Apple is, right? You know, iPhone, whatever. So if Apple were to sell me a stock, I'm going to get a tiny, technically, well, I'm going to give them the money. Technically, I'm going to get a tiny, tiny sliver of ownership of that company. So most companies, they usually start out, they only have certain people that they'll sell to, so that's what we call like a private company. So a good example of like a private company would be Meyer, you know, super big supermarket chain. So they're a privately held stock, so I couldn't go out and buy Meyer stock. But I could go out and buy Apple stock or another really huge Amazon. So let's see, then once some companies become large enough, they figure out, oh, we kind of hit our limit in how big we can grow, so they're like, okay, we're gonna sell stock to like the average folks, so that we could buy them. So that, and they call it a IPO, an initial public offering. So we, as common people, can give money to them so they can continue to grow their company, and hopefully their stock goes up so like we can gain on that benefit.
Yeah, so I'll give you a practical example of this. My wife has started a business recently. They rent out sheep to, oh, you have a question?
What is that word underneath the black tape?
Buy and sell. So my wife has started a company recently. She partnered with a sheep farmer, and they rent sheep out to clear properties. So like, look outside, see all this stuff under the trees and stuff? Sheep will come and mow that down for you, and it's kind of like an environmentally friendly alternative to like brush hogging something, right? And they're getting a lot of interest now all of a sudden from solar panel companies. So there's going to be a lot of solar panel fields getting put up, and it's kind of hard. Traditional mowers can't get under the panels, but you can grow sheep in the fenced-in area. And so anyway, right now that is a private company. And so can you buy stock in my wife's tending tilt business? Not unless she wants to sell it to you privately, right? You know her, and she needs your money, and so she offers you an investment opportunity. But if they were to IPO, and now they were traded on a stock exchange, could you buy shares of Tending Tilt? Yes. And why would you want to own shares of Tending Tilt for any company? Yeah, because now if the company does well, you get to participate in the profits of that company.
All right, so it looks like this graph, a little confusing at first, but it's just talking about how U.S. households, I guess, own all their assets. So everything that they own between money, cars, houses, electronics, anything like that is all going to be incorporated here. So we first look at the smallest part, looks like insurance. So based on sort of health insurance, life insurance, any other policies like that. We've got bonds, which is similar to stocks, maybe a different concept. I don't know if it's covered super much here. Looks like cars and appliances also make up a small portion. Cash, those would be like, you know, bank accounts and all of that. I guess healthcare and pensions. So pension is just another retirement tool that I don't know if we talk about it here, but and then houses looks like makes up the next portion. But look at this, stocks make up 33%, 1/3 of all U.S. household wealth. So that just shows you how important in the real world, how stocks and investments accounts can be. Now if we move over to this graph over here, this graph will actually separate it between, I guess, the richest individuals in the country versus the first 50% wealthiest people. So obviously, from first glance, you can easily see how much more important stocks and investing are for those wealthy individuals, right? And then if you come over here, we have consumer durables. So this would be just materialistic goods. So, I mean, I'll be honest, you know, I'm trying to get some drip every once in a while, you know, but I mean, that's not what like the average like super wealthy person's thinking about. So obviously that's such a smaller percentage of what matters to them, right? So versus here, the first 50% people, those things are going to matter a lot more, which allows them to only do so little with stocks and investing.
And so how many of you guys have heard of this guy up here, Eddie Brown? So you haven't heard of Warren Buffett, so you probably also haven't heard of Eddie Brown. But you should know about Eddie Brown because he runs an exceptionally successful investment management firm out of Baltimore. And founded it back in the early 90s, around 1992. And one of the things you should know about investing in the stock market and being a professional investor is it's extremely competitive. How many of you guys play sports? And it's fun to win, isn't it? Well, so the stock market is kind of like that. If I make a successful trade and I'm making money, somebody else sold me that stock and now they're not making that money, right? I bought it from somebody. So it's competitive. And the way we gauge success is often how are you doing relative to all the other professional investors? Are you doing better or are you doing worse? Because if you're doing well, typically that means somebody else, it's a zero-sum game, somebody else is doing worse. So since Eddie founded his firm in 1992, they have beaten 99% of their competition in terms of generating investment returns. Today, across 37 employees or so, they manage over $11 billion. So extremely successful. And what Eddie has to say about this is that equity ownership, when you hear the word equity, you should think stock market. That's another term for stocks, is equities. Equity ownership is the rocket fuel for wealth creation. And you can see that here on this chart, right? So we're here. What is the point of investing again? Say your name and answer the question.
Isaiah, and it's to have money for the future.
Yeah, take your little bit of money today and grow it into more money tomorrow. And it's pretty clear that the wealthiest people in America, anyway, get this concept. They have more of their wealth in equities in the stock market than less wealthy folks, the first 50%. So I'm still over here, you know, probably, I imagine. Consumer durables. Oh, so the point is to take your little money today and grow it to more money tomorrow. Let's look at these categories. Consumer durables, so stuff like your fridge, your washing machine, your car. What happens to the value of those things over time as they get older? It's down. And that's kind of a bummer. Your house is one of those things that can appreciate also, but what goes up typically a lot faster and the most is your investments in equities, because companies are working to grow their earnings over time. We'll go through an example of kind of the dynamics of how this works, what you get when you invest in a stock.
All right, so we're not going to get into how like the stocks actually trade, so how could like the average person actually get their hands on one of these. So we covered it a little bit earlier, but a stock exchange is, I guess, the medium and like where people will actually get some of these stocks. There are some that are electronic, so a good example would be what the NASDAQ.
Yeah.
Yeah, so it would be electronic, and some are still in person, which there are some in New York. So if I want to buy a stock, I'm going to submit a bid, which means it's the maximum price that I want to pay for it. So let's just do his wife's company. So let's say the most I'm willing to pay is $50. I don't know. We'll see if that's undervalued, overvalued, whatever. What do you think?
Oh, it's got a great growth prospects.
All right, perfect. So let's say he owns some of that, okay? And he is going to submit an ask, which is the minimum price that he's willing to sell it for. Okay, so hopefully within these stock changes, they're going to try to match up my bid and his ask. So hopefully line up, and then we can have the transaction. So I'll give him the $50, and then I'll get the stock.
Yeah. And how we determine the price we're willing to buy or sell at, it's all about the cash flows that the company is going to be able to generate in the future. You're trying to figure out what are those cash flows likely to be, because again, the whole point of this exercise is I've got some cash today, I want more tomorrow. What are the profits of that company going to be out in the future, and what should those profits be worth to someone today? So if I have a really, I don't know, they call it bearish, but a bad outlook on Apple. I don't think they're going to sell that many iPhones, right? There's going to be a new phone, it upsets their market. I'm going to want to sell that stock because I'm going to know something that everybody else doesn't know. Those cash flows aren't going to be worth as much as everybody thinks they are. So I'll sell Apple in that case. And then the opposite would be true too. So I know Tending Tilt's going to be a great company. I'm not going to be willing to sell. I'm going to want to buy as much stock as I can.
Is that only if it's public? Can you do that same thing when it's private?
Absolutely. Happens all the time with private companies too. The one difference being you don't have the opportunity in an anonymous fashion with anybody. Like with publicly traded stocks, anytime you want, you go out to one of these computerized exchanges, there will be someone willing to sell that stock at some price. With private companies, you do the same thing. However, you'll need to privately arrange for the price, and you need to privately know the seller who's willing to sell those stocks. So the opportunity for the average person is typically more limited. But let's say your buddy wants to start a restaurant, private restaurant, and they come and they want to sell stock to you. I need $10,000, and I'll sell you 10% of my company. Well, you need to think that company's worth $100,000 to think that that's a fair deal for you, that you'll get better returns on that kind of investment. Yeah.
Why would a company want to sell stock?
Oh, yeah, that's a great question. So take the example of my wife's firm. All of a sudden, there are all these solar companies that want to hire her sheep, but she needs money. She needs to hire employees, she needs to buy more sheep, she needs to buy more equipment, and maybe she can't get a loan, or maybe she just doesn't want to take on the debt. She can then sell stock in her company, and that will give her cash today to help the company grow. And in exchange, she has to give up some of the ownership. So now, instead of getting 100% of the profits, she'll get some smaller amount, but she'll have the money to grow those profits more quickly.
Alright, so because now I own a little sliver of that company that his wife owns, I technically could have voting rights. So a lot of the bigger companies will have annual voting sessions. So I mean, obviously they're like sort of virtual call or whatever, and they'll send you a form by email, and you can send in your votes. Because I only own one share, let's say Apple, my vote's not really going to matter that much, right? So that's why you want to try to build up all those voting. Or if you get more stocks, obviously you get more voting rights. So also, by having shares of stock, some companies that are a little bit more established, they're going to like share those profits, as he keeps mentioning, in forms of dividends. So it depends on the company. Every company is different. Some company does it every month. Some companies do it, maybe every 6 months. They'll give you a portion of that profit based on how much of that company you own. So I know through my Robinhood app, I got a free Johnson & Johnson stock, and every 4 months they give me $2 in dividends. So, I mean, I only have one share though, so that's why it makes sense. Oh, you're only getting so little. So once that compound interest grows over time, you can reinvest those dividends. So slowly your share in your ownership grows little by little. So eventually my dividends, by the time I'm 100, it should be a little bit more than $2. So.
Yes, sir.
What determines like how many shares or stocks a company has?
Okay. Good question. Well, yeah. Boy.
Come on, say it.
Yeah, I'm going to try not to get very technical about it. Okay, so how big your company is depends on people's expectations of the profits you're going to generate in the future. So, what's the biggest company in the world in terms of investment size, like the value of the company if you were to buy their stock? Does anybody know? Yeah, that's a good guess. Amazon was close. You said the S&P 500 is a group of 500 of the biggest stocks, so it includes this one. It's Apple, actually. So Apple, in the market, is worth a little more than $2 trillion today. So if you wanted to buy all of Apple and be a private owner of Apple, you'd have to come up with $2 trillion, which is a lot of money. What is the richest person in the world? Does anybody know? I had a long talk with my wife about her singleness. Okay, so the richest person in the world has founded a few companies. One of them is a car company.
Elon Musk?
Elon Musk, yeah. Does anybody know what Elon Musk is worth? So if Apple's worth $2 trillion, how much is Elon Musk worth?
300 million?
He's worth, I think, around $150 billion. The stock's down recently, but so anyway, you'd have to come up with 10 of the richest guys in the world to buy Apple. They'd have to put all their money into it. But so that determines the size of the company overall. So if Apple's worth $2 trillion, then your next question is, how many shares of Apple are out there, have been issued, and are available to invest in? And let's just say there was 2 trillion shares. Apple would trade at $1 per share. Who decides how many shares are issued? It's the board of directors of the company. And so sometimes you'll hear about something called a stock split, where let's say Apple started out with 1 million shares, and then all of a sudden the company grew to be $2 trillion. Now, just to buy one share of their stock, you have to spend thousands and thousands of dollars. The board of directors might want to make that more available to people, so they'll go out and they'll issue more shares. And if you already have some, you'll get, let's say they did a 10-to-1 stock split. If you started with 1 share, you would get 10. Everybody else who owned Apple today would get 10, and then the price per share would be lower, so that more people could go and access the stock. Sorry, that's kind of the technical topic. But
it's not so much, so 100% of your wife's company, it's not like you're really giving or selling 2% of that company. Now you only have 8. It's a fraction of that 100%, right? Or
Yeah, that's a good way to look at it too. I mean, one way is the number of shares that are trading. That's kind of arbitrary. The real way to think about it is what percentage of the company do I own, am I entitled to receive the profits of? So, yeah. So right now my wife owns 100%. We could sell 10% of the company to an equity investor. Then she would own 90 and that person would own 10. And then get 10% of the profits, 10% of the voting decisions, 10% of the affairs.
is that the same in a larger company? Is that 10% really 10%, or is it a fraction of those numbers really cut down?
But it's both. It's really 10%, and it's really would be 10% of the shares outstanding too, and you would get 10% of the vote on the affairs of the company and everything else. Yeah. So this gets us to the second thing I want you to know. So what was the first thing I wanted you to know again? Don't look down when I'm pointing.
Does this stop?
No, first thing was, what's the point of investing? Take some of your small money, grow it to be larger money in the future. Second thing is, when you invest in a stock, what do you get? And yes, you get dividends and stuff, but really what you're getting is you're getting rights to the cash flows of that company after they've satisfied all their other obligations. I'll say that one more time. Rights to the cash flows after they've paid off all the other things they have to pay off. And so for my wife's company, for example, or let's take Apple. You know, Apple has employees, they have suppliers, they have debt payments to make. You don't get all the sales of Apple, you get the profit after they've paid all of those expenses off. So let's go through an example looking at the company Starbucks. You want me to do it? You do.
Yeah. All right. So if I go to Starbucks right now, I'm getting my nitro cold brew. I prefer hot coffee, but we'll just use this for the example. So now, I don't know if it's only $5. I know I've paid a little bit more, but where does my $5 go? All right, so $5 I give to the cashier, okay? So for store employee wages and benefits, so to pay the employee, $1.20 is going to that. Looks like utilities, property taxes, maintenance, so lights and maybe plumbing issues. Looks like 90 cents is attributed to that. $1.40, so a big chunk of it too is also for the actual supply, so coffee, milk, sugar, packaging, shipping. And this would all encompass what we call a cost of goods sold. So anything that relates to the actual good, these three items, looks like $3.50 relates to that. So and from that $5, $3.50, looks like $1.50 is that gross profit. But we have even more costs after that. So selling and general administrative costs, so kind of like back of the house managerial stuff too, 35 cents, depreciation, 25 cents. What would that depreciation?
Yeah, so for example, this is a business concept, but Starbucks went out and bought an espresso machine and they paid money for it. It only lasts 5 years. You're going to write down the value of that machine, and they call that depreciation, because you know after 5 years you have to buy another one, right? So that's the accounting way of keeping track of that expense of the machines getting less valuable over time.
So it looks like some other costs. We have operating expenses, and then operating profit. Oh no, that's the total. Wait, no. Yeah, now we're good. Yeah. And then interest expenses, so if they had a loan out from a bank or something and they're paying back interest to take out the loan, maybe to buy some of that equipment that we talked about earlier. Income taxes, so obviously we all have an income tax, so do businesses as well. And then looks like last but not least, other expenses, okay. So there we go. And it looks like that 25 cents just incorporates that. So overall, our net income that is available for like the shareholders of that company is only 60 cents. So you can see how much goes into providing all of this for a consumer.
But if you own shares of Starbucks, that's for you. And they can decide what to do with that 60 cents. They can either take it and pay it to you in a dividend, or if they've got good things to do with it internally, like open new stores and things like that, they might not pay you a dividend, they might keep it and use it to reinvest in the business and keep growing.
And then think about, this is only 60 cents to $5. Like, oh, that's not that good. But like, think about how big Starbucks is and how many coffees do they sell in 1 minute in the United States. Like, that number is going to be massive.
Yeah, so here is the story of Starbucks from the shareholder's perspective. What's happened with all those 60 cents over time? So Starbucks was originally a private company, and they opened up in the Seattle area in the late 80s, 1985, 1987, something like that, or 1971, excuse me. And then they were growing. It was catching on. People liked their coffee. And like we talked about earlier, they wanted to expand more. And so they went public in 1992. And why did they go public? Say your name and ask the question.
So that we could expand the shares to the end.
Yeah, when they sell the shares, they get the cash from selling those shares. And now we can take that cash and we can start opening more stores, right? So we're probably not making enough profit to do that without selling the shares ourselves. We need to go out and get some more money from investors. So they issued 2.1 million shares at $17, so they raised about $50 million or whatever that is, and they used that to open more stores. And you could have bought that share of stock at $17 at that time, and let's say you just hung on to it and you kept reinvesting the dividends that Starbucks paid you. What would that $1 that you invest, or $100 that you originally invested in Starbucks stock in the IPO be worth now? $39,000. So that's nice. I would like to turn my $100 today into $39,000 in 30 years or so, 20 years. Okay, so that's kind of the whole point of investing. Yes? I am doing that, yeah. So I'll go back to this graph. I really believe what I'm telling you today. So I mentioned here that a lot of these assets depreciate, and it might not be smart to put your money in depreciating assets. You might want to own things that go up in value. Greenleaf fortunately pays me decently today. So stuff in the consumer durables category is stuff like your car. I drive a 2009 Toyota Yaris. Does anybody know what that is? I wish I had a, it's not exactly a chick-mobile, yeah. But I put a lot of my money into the stock market. Why? Well, because I really believe this, and I would like to later drive a Lamborghini or whatever instead of a Yaris. But today it makes sense for me to do it this way, right? Okay, so this was point number 2. What do you get when you're a shareholder of a company? You get the profits after they've satisfied all their other obligations, including debt payments and taxes. Okay? And that's why you want to do it. Third thing we want to teach you about is what kind of stocks are out there to invest in. And we got to go a little quicker maybe than we have been, because we're going to split you up and make you think about this. But there's 41,000 listed companies in the world, so you have lots of opportunities to invest in all kinds of different publicly traded stocks. And the way people think about it is they break it up into sectors of the economy. So these are the major, there's 11 major sectors. And what we're showing here are some of the breakdowns. So the biggest one in the United States is information technology companies. So these are like Apple and Microsoft. And they break up into software services, technology hardware, which is like an iPhone, and then semiconductors that go into the iPhones. Second major category is healthcare. You guys can imagine pharmaceutical companies. A couple of our big companies locally are in the healthcare sector. Does anybody know who I'm talking about? Yes? Stryker. And there's another big one that has a facility in Portage. Pfizer, yep. And you could say Bronson Healthcare Group is another major employer around here. They're a nonprofit healthcare company, so you wouldn't own stock in them. Financials, so stuff like what Greenleaf Trust does, banks and insurance companies. Consumer staples, and I'm going to contrast that in a second with consumer discretionary, but staples are things like groceries, things that you sort of need to buy. Food and beverage companies, household products, stuff like that. Real estate, which would be all of the commercial real estate kind of stuff, so like malls, office buildings, warehouses, that kind of stuff, apartment buildings. And then energy companies, which sell energy products like oil and natural gas. And then here are the other major, don't worry if you didn't jot every single one of them down. The other major category is consumer discretionary, so this is more like fun money, where you don't need to spend it as a consumer, but you want to. So things like automobiles, retailing, so clothing companies, that kind of stuff. Communication services, which includes like Verizon and AT&T, the actual telecommunication services type companies, but then also media and entertainment, so stuff like Facebook, other cable companies like CBS. Industrials, which are like make machines and things like that, so like Caterpillar or John Deere. Materials, which sell stuff like chemicals and things like that, paint, and then finally utilities companies. Anybody know who the utility company is in our area? And your parents pay their utility bill? Yeah, it's Consumers Energy. And did you know you can buy stock in Consumers Energy if you want to? Okay, so we're going to do a little activity here. Work with some of your peers, and I want you to think about 3 companies, and it's probably not for every sector, but think about something that you or your family has purchased in the last week, and then we'll talk about the public companies, or try to think of the public company that might have supplied that product. Okay? Okay, so that was our section. We went a little bit over time. I apologize for that, but hopefully you guys feel like you learned something. So the third thing was, what are all these different kind of stocks that you can invest in? So what was the first thing I wanted you to know in the back? Say your name and answer the question.
My name's Ari, and wait, what was it?
The first thing we want to know today. There's 3 things. Any of the 3.
How to take your money today and turn it into more.
Yeah, that was number 1. What's the point of investing at all? It's because I've got some money today and I want it to grow into more money tomorrow. Second thing, what do you get when you invest in a stock? And I'm going to go right here.
Trona, and you get like the right to profits.
You get the right to profits, exactly, yep. And then the third thing is just, what are all the companies, and that's what we just covered, that you can invest in. There's 41,000, tons of opportunities in a bunch of different sectors. And so if you remember those 3 things from today, you will be in great shape as we go through this program to participate fully as we build out on some of these concepts out in the future. Okay, thank you.